So the market closed pretty much flat today, which if you just glance at it, looks like a super quiet day. But that doesn't even begin to tell the whole story. Underneath that calm surface, there was this massive battle raging between the bulls and the bears. So the big question is the Nifty getting ready for a big bounce, or is it about to break down?
And that's really the core question we're going to dig into right now. We're going to peel back the layers of today's trading, figure out what really went down, why it happened, and most importantly, what it all means for you tomorrow.
Okay, and this chart right here, it shows you the puzzle perfectly. Just look at that tiny little bar on the left. That's the closing change. Now look at the big one next to it. That's the intraday range. I mean, that huge gap between them, that tells you the real story. It was a wild, choppy day that was just masked by that flat finish.
All right, so let's jump right in and put some numbers on the board to really get a handle on today's market puzzle.
Okay, so here's where we officially landed. The Nifty just, and I mean just, squeaked into the green at 26,027. But the Sensex? Nope, it couldn't quite make it, finishing the day down 54 points. Kind of mixed signals, right? Okay, now let's really break this down. We're going to treat these numbers like clues, almost like a detective story, to figure out where the market's really heading.
So the base started off on a pretty shaky foot. We opened down at 25,930, which right away put the bears in the driver's seat.
And from there, the sellers just kept pushing. They drove the index all the way down to its lowest point of the day. For a minute there, it was really looking like a pretty bad session.
But then, and this is the key part, we saw a huge recovery. The buyers came storming back in and pushed the market all the way back up to close at 26,027. So the big takeaway here is that powerful bounce we saw right off the day's lows.
And this right here, this is the perfect picture of that tug of war happening inside the market. On one side, you've got sectors like aviation and paints trying to pull everything up. But on the other side, you've got autos and energy trying to drag it all down. It's this internal fight that made it so hard for the market to pick a direction.
And then we have the India VIX, what everyone calls the fear gauge. It ended the day at 10.27, up a little bit, about 1.6%. Now, even though it's up, that number isn't screaming panic. It's more like, hey, expect some bumps, but not a full-blown crisis. So the volatility was there, but it was contained, which leads us to the real question: what was causing it?
All right, so we've seen what happened. Now let's get into the why. What were the hidden drivers pushing and pulling the market all day?
Okay, this number right here, this is the smoking gun. Foreign portfolio investors, we're talking about the big overseas funds, they've pulled out a whopping 10,720 crore rupees recently. When that much foreign money leaves the market, you're gonna feel it. It's the #1 reason for all this pressure and choppiness.
But it wasn't just the FPIs. We were also dealing with a bit of a perfect storm. For one, the rupee is getting weaker against the dollar, which just makes our assets look a little less shiny to foreign investors. Then you've got all this uncertainty still hanging around the US-India trade deal, and on top of all that, cues from global markets haven't been great either. You mix all that together, and yeah, you get turbulence.
So, you might be asking, what stopped a complete meltdown? Well, it was domestic support. Our own players stepped up. We saw real strength in certain sectors here at home, especially metals. Think stocks like Tata Steel. This domestic buying basically acted like a safety net, absorbing a lot of that foreign selling and keeping us from a much steeper fall.
Okay, so now that we have the full picture of what happened today, let's look ahead. Let's lay out a clear trading map for tomorrow's session.
Pay close attention here. These are the key levels you need to watch. Think of resistance as the ceiling the market needs to break through. The first ceiling is at 26,100, and if we get past that, the next big one is at 26,180. Now on the flip side, support is the floor. The first safety net is at 25,900, with an even more critical floor below that at 25,820. These are the battle lines for tomorrow.
So what's the bottom line? The mood is cautiously bullish. But, and this is a big but, it all, and I mean all of it, depends on the Nifty holding that super important 26,000 level. If that breaks, the whole picture changes.
All right, let's put it all together. Here's a final, straightforward game plan based on everything we've just talked about.
So here's a simple 3-step approach to think about. Step 1, confirmation. You've got to watch and see if the Nifty can actually hold its ground above 26,000. Step 2, your entry.
If it does hold, then a buy on dip strategy could make a lot of sense. And step 3, the most important one, protect yourself. You absolutely have to manage your risk. Use things like trailing stops, which can help lock in profits or cut losses automatically. In a choppy market like this, it's non-negotiable.
And as you get ready for the next session, keep these 3 things on your radar. First, that FPI data. Are they still selling or are they easing up? Second, the rupee versus the dollar. Where's it headed? And third, of course, keep an ear out for any breaking trade news. Any one of these could change the game in a heartbeat.
And all of this leaves us with the one big question, the cliffhanger for tomorrow's session. We've seen the battle lines drawn so clearly today, but will the strength of our domestic buyers be enough to hold the line if foreign investors keep heading for the exits? That is the real tension that's going to decide what happens next.